report that you had. I think most of you know my wife had fibroid tumor surgery last Wednesday. But I thank you for your support and your prayers with that. As a tax accountant, I get to see a lot of juicy stuff. And what I mean by a lot of juicy stuff, it's quite intimate. And when I look at people, I'm going to go through the three basic things that are important. Your business name, the entity type, and then business credit. I will bypass 1 and 3 and get into the entity type. Why is that so important? Depending on how you set up can cost you several hundreds of thousands of dollars. I will ask Franz a question. If I asked you to give me $10,000, you look at me like I'm crazy, wouldn't you?
Not if you could give me like $150,000.
Good answer.
Yeah.
You got mafia ties? Yeah, mafia ties.
Oh, yeah. Well, you know that.
Okay. I guess since I am your accountant, I guess I wouldn't know. I'm joking on that. With that said and done, most people who have sole proprietorships and single member LLCs, by default, they're giving the government on an average of $5,000 to $10,000. I have a client right now that I'm dealing with that has a single member LLC. She grossed over $500,000. Now, this is her, now that's a good problem to have, but she's about to give away $2,500 to the franchise tax board, plus the $800 annual fee. That's $3,300, not counting the hefty $1,000 for my tax bill. Okay, so that's over $4 grand. So she could have saved $2,500 if she was set up in the wrong entity. So now here's the other thing that hurts sole proprietorships. Credibility. You'll fly by now. You can set up the business easy, you can get out of the business easy. Credibility hurts you. There's certain things you cannot do by default. If you want to set up an MBE, which is a minority business enterprise, females by default, no matter what your ethnic group is, by default you are a minority, unless you're a female. That's something you can qualify for. As a sole proprietorship, legally speaking, you can, but it's almost a waste of your time because how you view the funds. And that's the problem with sole proprietorships. As I said before, the Hotmail, the Earthlink, the Gmail, email addresses as a business owner, it really hurts you. And it's one of the most interesting things that sniffs out of audit too. They just got my attention. Because of credibility. So when you look at a single member LLC, it's just like a sole proprietorship. Same functions. So I have several of my clients, and Jeffrey was one of them, that has a corporation. We turn around and recommend to set up an LP to be a partner of the corporation. So Russell push years over there. They don't have to pay payroll anymore. And I said the payroll tax.
Some LLCs do though.
No, it's an LP.
Oh, LLP, okay.
LP.
Okay.
No, the owners. The owners do not
Because
have
they're
to
partners.
pay payroll.
Right.
Because they're partners. They take draws. So they only subject to ordinary income, which is like a dividend, like interest. That's how that functions. So as a result of that, one client, not Jeffrey, they're saving a minimum of $20,000 a year just by that legal setup because they don't have to pay payroll taxes anymore. So now we're going to leverage that $20,000 and then set up a retirement account for them. So same money that was being paid now is working for them instead of working against them. That's where great tax planning comes in at. So I have another client, I'm going through a deal right now. This potential person, after the company is sold, could probably make on an average $8 to $10 million a year. They want to convert into an LLC. Obviously I'm not their accountant, and that's not my problem. But every year you gross over $2 million in the LLC, you have to pay a minimum fee of $6,000. So you wonder why I'm not a fan of LLCs. You're giving away money. LLCs are perfect for shareholding companies. I mean, ideal for that, because you creating almost what I call a double titanium hull. So your corporation is your operating company, but all your assets in LLC. So if you sue the corporation and win, it doesn't matter, because the assets are in the LLC, not the income. The assets are. So, which means you got to fork up more money to sue them. So, most people look at me and say, okay, what's the best company to set up? Well, it all depends on what type of company you are. I believe, I'm hearing rumors that, thank you, the IRS are doing away with FLPs, Family Limited Partnerships. If you really want to get into an asset protecting entity, that's it. LPs are great. Why are LPs so great? LPs are so great is that if you lose the lawsuit, you don't have to pay the person until you approve distribution. So if you don't make any distributions, you don't have to pay the lawsuit. So my former pastor had a saying, there's no premium on ignorance. Now insurance people will really get this. You cannot get a rate of return on being ignorant. So all joking aside, it's costing people millions and millions of dollars that they turn over freely to the government. And unfortunately, it all depends upon who your tax advisor is. I can almost guarantee you about 90% of tax advisors who give other people advice, if they was in the same situation, they would not be giving you that advice. That much I can guarantee.
That's kind of a bummer.
Well, you know, rumor has the same thing about insurance people too. I'm joking around.
That's not true.
That's not true. Okay. At least with one insurance person. The other 99.999.
That's right.
You know, we got a problem with them. With that said and done, I'm going to open up for a few questions that you may have related to taxes or incorporation. Any questions?
Yeah, why is, you know, like, you're saying like LLCs are bad, so why do some people like restaurants incorporate to an LLC instead of like a C Corp or an S Corp?
Well, in an LLC, you don't have to pay payroll taxes. That's the advantage of an LLC, but it also depends on how much money you gross. And I want to add a caveat to this, because I won't mention the restaurant because it's not too far from here.
Well, I know of one, yeah.
Right. No, I'm talking what I'm about to add on to what you said. This particular restaurant had like 41 owners. They all had equal shares. Roughly 10 of them had bad credit. So when they applied for a loan, whoever owns 21% or equal credit, if you got bad credit, it's like everyone has bad credit. So that's the other thing that you need to be looking at. See, partnerships is like marriage with no sex. Now, if you having sex with that person, then you got some benefits, okay? All right? But that's what a partnership is. Remember what I said, there's no premium on ignorance. So when you're going into a partnership or any business relationship, you should get a background check on who you're doing business with, because your credit becomes very important, especially when you're trying to get business credit. Yes, JD?
If you're switching, if you recommend someone to switch from a LLC to an S Corp or whatever, does that create a red flag for the IRS?
No. And here's the reason why it doesn't. EIN numbers, 10% chance of being audited. Sole proprietorships, Schedule C, Schedule E, almost a 35% chance of being audited. And when I'm about to wrap up with this little single note, the IRS has laid off or fired several people from the IRS. Now on the other side, they rehired a boatload of auditors. And who are they going after? Schedule C's and Schedule E's. Now I love that for this very reason. I got two clients that I'm about to represent right now. Minimum $5,000 to $10,000 they're going to have to pay me to represent them. So once again, I keep saying this, there's no premium on ignorance. A great tax accountant will be your best friend. People turn around and say, well, my tax accountant is not my best friend. You're not making enough money. So I want to say thank you on that.